despite net zero pledges, major European banks are funding projects to expand oil and gas production. That's according to a report by non-profit ShareAction. 25 of the region's biggest lenders, including Barclays, HSBC and Deutsche Bank, provided $55 billion to energy companies last year. And while that amount is nearly half what European banks financed in 2020, it is more than double the figure for 2018. The International Energy Agency has warned that net zero carbon emissions needs to be achieved by 2050 to keep alive hopes of limiting global warming to below 1.5 degrees. Well, let's discuss this further with Ilan Kelman from the Institute for Risk and Disaster Reduction at University College London. Thanks for joining us on DW Business. We're not actually in a post-oil and gas world yet, are we? We still need both to meet the world's energy needs. So why is it a problem that banks are investing in oil and gas projects?
Well, part of the reason that we're not in a post-oil and gas world is because the banks are investing in the projects. No one's asking for a transition overnight, but we now have plenty, we have enough to be able to avoid new investment. And that's what this report is about, trying to avoid new investment, particularly when these banks have committed to not doing this.
But we are seeing investment dropping. I mean, HSBC invested half as much in 2021 as they did in 2020, and it seems to be dropping across the board. If we're not expecting it overnight, what's the problem?
Yes, and this is very encouraging. It's very good trends. And the problem is that, again, they've committed to ending their new investment. It could be done much sooner and much more rapidly, and the work that they're doing is very appreciated. But we've so many opportunities out there to avoid new investment in oil and gas. We know that we need this transition and we can do it. So the problem is that it's simply not fast enough.
And there is this UN-led net zero banking alliance that all of these big banks have signed up to. Does this suggest that they're not quite taking their obligations under that seriously enough?
Well, it definitely suggests that they're in a very old mindset. They are absolutely not aware of the major concerns which we have in continuing to expand oil and gas usage, and also all the alternatives which are out there. They are really digging themselves into a deep hole because we know that oil and gas are so heavily subsidized by governments. We know that society is pushing to end those subsidies and to use the energy systems which we know are available now, which are not oil and gas. So the banks have the power. The banks have the impetus and the money. All they need is the knowledge and the will to say, you know what? We can do this quickly. We can take on board the criticisms and add to what they're doing in order to go much faster and much more substantively.
You mentioned governments, and there's also obviously the companies that are receiving this money from the banks. Shouldn't we really be focusing on them rather than the banks?
It's all of us, and we need to focus on everyone. So the banks are making the decision to invest. That means that they should be part of the discussion. Governments are making the decision to subsidize. They have to be part of the discussion, but it's also the companies. The fossil fuel companies are actively seeking investment. They're taking it, and rather than going into demand reduction and much more sustainable supplies, they're also saying, look, we can go for oil and gas. So this is about all of us, including our individual use and where we get our own energy from. We're all part of this planet. We're all part of society. So let's come together and do what we know we can do, which is much cheaper, much more effective, and much better for our health and for the planet's health.
OK, Ilan Kelman from the Institute of Risk and Disaster Reduction at University College London. Thank you very much for joining us.
Thank you.